Did you know that most Muslims invest in halal stocks, but do you want to realize they might still be earning non-halal income? It's true, even when you choose Sharia-compliant companies. There's something critical you need to do to keep your earnings 100% pure. Today, I'm going to explain exactly how to purify your investment earnings according to Sharia principles. By the end of this video, you'll know the exact steps to make sure every dollar you earn from investing is completely halal. Let's dive in. Assalamu alaikum. I'm Leo, and my mission is to help Muslims grow their wealth the halal way without compromising their faith. In today's video, I'm breaking down 3 essential points. First, what purification actually means in Islamic investing. Second, why even halal investments sometimes need purification. And third, how to purify your earnings and practice step by step so you can implement this immediately. This is practical knowledge every Muslim investor needs, so stay with me until the end. The problem: why purification matters here as something that surprises many people. Even companies that are considered halal can have small amounts of non-halal income. How does this happen? Well, imagine a company like Apple or Microsoft. They sell products and services that are completely permissible, but they also might earn a small percentage of income from interest on their cash reserves. Or maybe they have a minor business activity that doesn't align with Sharia principles. For example, a tech company might earn 2% of its revenue from interest on the billions of dollars sitting in their bank accounts. A food company might have a small financing division that charges interests. So here's the critical question. Even if your stock is halal, how do you make sure your profit is pure? This is where purification comes in, and it's a concept every Muslim investor must understand. Define purification. Let me give you a simple definition. Purification is the act of giving away the percentage of your earnings that comes from non-halal sources to charity, so that the rest of your income remains halal. Think of it like this. If a company earns 2% of its revenue from interest, and you made $100 in profit from that stock, you would donate $2 to charity. That $2 represents the impure portion, and the remaining $98 is now completely halal for you to keep. And here's something important to emphasize. Purification is not a tax. It's not optional. It's a Sharia requirement to ensure your wealth is clean and blessed. The scholars have made this clear. When you invest in a company with minimal non-halal income, you must cleanse your portion of that income through charity when purification is needed. Now, you might be wondering, when exactly do I need to purify my investments? Let me break down the criteria. Purification is required when, number 1, the company earns a small percentage of income from interest or haram sources, typically less than 5%. Most scholars agree that if it's under this threshold, the stock can still be halal, but purification is mandatory. Number 2, the company has some debt, but it's below the Sharia threshold. Generally, if the D to market cap ratio is under 30 to 33%, the stock is permissible, but you may need to purify depending on the debt structure. Let me give you real examples. Companies like Apple, Coca-Cola, and PepsiCo are often considered halal, but they need purification because they earn small amounts from interest on cash reserves. On the other hand, companies like Tesla, they have no interest income and no problematic activities might not require purification at all. The key is, don't guess. Always check the Sharia compliance report for each company you invest in. Step-by-step process, alright? Now let's get into the practical part. How do you actually purify your investment earnings? I'm going to walk you through this step by step. Step 1. Identify the percentage of non-halal income. Use apps like Zoya or Islamically, or check reports from Sharia advisory firms. They'll tell you exactly what percentage of the company's revenue comes from non-halal sources. For example, Apple might show 2% non-halal income. Step 2. Calculate that percentage of your annual profit. Let's say you made $500 in profit from your Apple shares this year, and the non-halal income is 2%. You multiply $500 times 2%, which equals $10. Step 3. Donate that amount to charity. Give that $10 as sadaqah to a legitimate charity. It could be a mosque, an orphanage, a food bank, anywhere that helps those in need. The important thing is that you're removing the impure portion from your wealth. Step 4. Continue monitoring yearly. Purification isn't a one-time thing. Every year, you need to check the updated Sharia report for your investments and purify accordingly. Companies' financial structures change, so stay on top of it, and that's it. 4 simple steps to keep your investment earnings halal. Practical example. Let me make this even clearer with a real-world example. Let's say you invested $1,000 in Apple stock. After 1 year, your investment grew, and you made a $200 profit. Alhamdulillah, right? Now, you check the Sharia compliance report, and it shows that 2% of Apple's revenue comes from non-halal sources, mainly interest on their cash reserves. Here's the math. Your profit, $200. Non-halal percentage, 2% purification amount, $200. 2% equals $4, so you would donate $4 to charity, and the remaining $196 is completely halal for you to keep. See how simple that is? It takes just a few minutes once a year, and you have complete peace of mind knowing your wealth is pure. This is the beauty of Islamic finance. It gives us clear guidelines to invest ethically and grow our wealth in a way that is pleasing to Allah. Key takeaways, tips. Before we wrap up, let me leave you with some key takeaways and tips. Tip number 1. Always check Sharia compliance. First, before investing. Don't assume a company is halal just because it seems ethical. Tip number 2, purify yearly. Make it part of your annual financial review. Set a reminder on your calendar so you never forget. Tip number 3, avoid guessing. Use trusted halal screening apps like Zoya Islamically or Musa. They do the heavy lifting for you and provide detailed reports. Tip number 4, invest in long-term is safer and cleaner for your wealth. The longer your investment horizon, the more you benefit from halal growth and the less you're affected by short-term market fluctuations. Remember, purification is not a burden, it's a blessing. It has a way to ensure that every penny you earn is lawful and brings barakah into your life. Alright, my friends, if you found this video helpful and you want to grow your wealth 100% halal, make sure you subscribe to this channel and hit that notification bell so you never miss an update. Drop a comment below and let me know. Are you already purifying your investments, or is this the first time you're hearing about it? I read every comment and I'd love to hear from you. Until then, keep learning, keep growing, and remember halal wealth is blessed wealth. Assalamu alaikum wa rahmatullahi wa barakatuh.